Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had a great trading day yesterday. We are pretty much flat this morning as we are awaiting some discussion from the Fed, and we will see what happens with the markets after that announcement. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alert and the updates as they happen. All right, let's dive in. So, like I said earlier, we are flat this morning. The S&P, as we can see, is really just chopping sideways after our breakout to the upside that we had Monday, which was a pretty nice trade. Yesterday, we didn't really have a whole lot that was added. I mean, put in a new all-time high, but not enough in here for us to really lean on and take a trade from. You know, theoretically, you could play an intraday breakdown below this level here. Down to this area of demand. I think that that's a little bit higher risk because we're coming off the all-time high. But if you're looking for an intraday trade, that may be an option. But in reality, I think your better opportunity is to wait for the reversal, potentially in this level down here, knowing that my stop would still have to go. You know, the tightest my stop would be down here below this candle's wick, right over here to the left. That would be where the tightest my stop could be in this position. NASDAQ, very similar picture. Like I said, if you wanted to try an intraday breakdown, would look like shorting below this area here. If that would become something that would be that would interest you. Once again, a little bit higher risk because we're right off that all-time high, but it is a potential, and I think that there's room for the price then to run down from there. Next would be crude oil. So in crude oil, we actually came to our supply level yesterday and blew right through it. So this was a pretty good setup. Everything looked good for the setup, but unfortunately that level did not hold as a supply area. But the level itself had enough orders to really kind of hold true for the next little bit. So, now the question would be, are we going to continue to fall from this area? And if you wanted to go candle to candle on it at this point, I think it's not a bad idea, as it makes more sense. Now we're fully entrenched in this now sideways kind of price action, no clear overtly clear direction. Technically, you don't have a downtrend until you get lower than this candle's low. And your uptrend has gotten significantly weaker because you got a lower high and a lower low. So, I'm not quite there yet as far as a shorting potential, unless you take a breakdown. And so I think it's once again probably better to hold off on that trade. Looking at gold, so gold, we've rallied back up into the supply level we identified yesterday. The only downside to this is that my opposing fair price value area would be this area right here, which now means that my risk is this distance and my reward is less than a 2-to-1 reward to risk based on the opposing fair price value area. So duplicate that drawing and bring it down. And so with that reward being less than 2-to-1, there we go. With that reward being potentially less than 2-to-1, it's lower probability. So if you want to get into it, the trade is still valid. You just have to understand the risk that you take and the exposure is a little bit higher because the 2-to-1 reward to risk isn't really there. So that's what I would look at on this one is that our 2-to-1 just isn't there. So now what would be the next step? The next step would be to look a bit higher for supply, although on a 4-hour chart we are very sideways, right? So you could look a bit higher to this area up here for potential supply if we pop through there, or you once again could just hold off. I think today's one of those days where it might be better just to hold off and wait for price to make its move. I think that's super important. Is waiting for price to pick a trend direction and possibly wait for what the FOMC comes out and says. some point later today. The idea is that we'll probably have some sort of a continued rate cut, but will we get a rate cut at an all-time high, which happened, back before the 2008 fall is when we were starting to cut rates at the all-time highs. So, I'm not saying that we're at a 2008 kind of level, but it is something that's I do find kind of interesting. So that's why we see the bonds also chopping sideways. I mean, this sets up for a potential breakout to the upside. I mean, that's the price action that we're seeing. However, we don't take breakouts on announcements, so keep that in mind as well. On the Aussie, we had our breakdown from this level here. I think the Aussie may have actually set up a decent reversal. If we go down to the 15-minute, it's a little cleaner to see. But right through here, I think could set up for a decent little reversal. I didn't highlight that area because I wanted to see a little bit of follow through. So we didn't highlight that area yesterday, but I think that actually sets up for a decent little reversal going forward. Found it on the 15-minute chart. So I want to go to the smaller time frame to find those levels just to confirm that it makes sense, and there's a decent move away. It's done at a pretty good time of day, so that one may actually work out pretty well. And then in the euro, our euro level from yesterday, so we identified our euro level off here. Price did come back into that level, and then our 6 candle rule came into effect. 1, 2, 3, 4, 5, 6. So you take your stop and move it to break even, or take a little bit off the table. And so a little bit off the table probably makes the most sense in this for a little bit of a profit. Doesn't mean that the level's dead, by the way, but now I'm actually going to look for a potential upside breakout above here as well. Typically when I have a 6 candle rule that gets enacted, it actually sets up for a pretty decent breakout opportunity. And that could also get a reversal at this level here, so keep an eye on both of those. Canadian dollar, another one with the 6 candle rule kind of coming into play, as we had 1, 2, 3, 4, 5, 6 on this one to get you out at basically break even. So let's see what this one does from this point if we get another breakout down on this particular one. Great British Pound, Japanese Yen. As if my chart will move, there we go. So looking at the pound, still above the potential breakdown point in the pound as we're continuing sideways price action. So that nothing really to add or to change in that one. And then the Japanese yen, this is always frustrating. We missed this entry by a tick, quite literally missed this by a tick. And so the level itself is no longer going to be one that I'm going to lean on. You can switch it to a confirmation entry if you would like. But my problem is with all this basing, it's less than 2-to-1 reward or risk. So I'm actually just going to completely remove it because I think that's probably the safer bet. So if you notice a pattern here today, a lot of this is hurry up and wait. And for those of you that don't like waiting, you probably shouldn't be traders. Waiting is the most important part of this because I got to wait for price to come into my level, and I've got to exercise both patience and decisiveness. I've got to be patient enough to wait for price to come into my level, and then decisive when it does, and not try to break my rules when there's an announcement coming and force trade. So keep that in mind today. There's always going to be another trade as long as you don't blow up your capital by getting into the bad ones. So keep that in mind. So I hope you guys have an amazing day. If there's anything I can do for you, please feel free to send me an email, support@tradersonline.com.